In this video, guys, I'm going to explore the question, can spread bets be used to day trade the market? Stay tuned. Hey guys, and warm welcome to you. Right, so this is a good question. Can spread bets be used to day trade the market? Got some answers on the no side. No, it can't be used. And I've got some of the answers on the yes side. Yes, great to trade it. Now, listen, I'm slightly biased, but I know I'm going to try and sit on the fence here. I'm going to give my opinion on both sides and kind of look at it in a kind of objective manner. As Freudian slipped there, judgmental manner. I'm looking at it objectively, and I'm going to kind of look at both sides of the coin. I'm interested to hear what you guys got to say in the comment section below. Right, so let's have a look at the no side first, right? No side first. Day trading is risky. Guys, we hear this all the time. Day trading is super risky. Yes, it is risky, but it can work. And if it's something you're good at, it's a great way to trade. If you enjoy the intraday stuff, as you know that I do, I've been day trading for however many years it is. Now, 2001 I started, so lots of years, guys. Yes, it's super risky. I've been hammered, but I've also had some really great times as well. And when those great times are outweighing those bad times, then you're on to winners. So appreciate that it is risky, appreciate that things can go wrong from time to time, but when they go right, they go right. And it's very, very nice. Okay, so leverage can kill you. Yes, definitely. And that's what kills most traders. You know, they're over leveraging intraday, and they kind of don't recognize that it's a big move, or they're kind of zooming in on a chart that's really going quiet. They've got a bigger size, the market starts to go, they think they can predict, and they're kind of trading noise and then getting pinged out. And yes, you know, that's a really big killer of traders. So I kind of agree with that, but if you can measure it, of course, it can be an advantage. We'll talk about in a second. Hard to predict small moves. People say this, but I disagree. I think it's the other way around. I think it's easier to predict smaller moves, maybe not minute moves, but I think it's easier to predict on a shorter term basis what's going to happen over the next 10 minutes, hour, 2 hours, 3 hours, maybe even 2 days, than it is to predict what's going to happen over the next 6 months. That's just my opinion. And I think probably can back that up with some facts, because if you look at analysts, you've got analysts, the best paid guys at the best paid investment banks all over, they have a prediction from going from 200 down to 10p on a share. You know, they can't even predict it. Traders, generally, if you look at traders who have been in the game for a long time, there's a consistency there that would suggest that it's not just luck. You know, especially as well if you look at like the market wizards guys, you know, some of the returns that some of those are putting up are extreme, and they worked out that some of the odds of someone doing that consistently for 10 years is like 1 trillion to 1 or something. So you can't say that there's just a selection of lucky traders who are up and are doing stuff. So, you know, again, that's personal opinion, and I guess it's personality as well. Someone who's a swing trader or an investor might completely disagree and say, hey, I just can't predict the small moves. But someone like me, who likes to trade intraday and short-term stuff, is going to completely disagree with that and say, well, actually, you know, I can't predict every small move, but there's certain ones, setups, which I know over time, if I keep taking them, will work in my favor. So I don't agree with that one, but that could be something for you. Emotions can control you. I definitely do agree with this one. And we've talked lots on this channel about how to control emotions, trading discipline, mindset, psychology, etc. And if you haven't subscribed yet, by the way, guys, make sure you do subscribe. And if you want to, hit the notification bell so you see the videos that are coming as they come through, as they're uploaded. So they can control you, and you've got to be aware of that. There's no getting away from that. That can something that can hurt you, as can, you know, the leverage. But if you're mindful of it, you're aware of it, you recognize it, you can do stuff to limit it and even harness your emotions. You don't get exchange access. That's a pretty reasonable one. And what that means is, you know, a lot of day traders, specifically in the US, would trade directly on the exchange. So rather than spread betting, you're buying and paying that spread, they would work a bid on the exchange and get filled on the bid, so they'd be being paid the spread. Now, there is some legitimacy to that. However, it does depend on the type of strategy you're using. Because if you're using a very short-term scalping strategy, then yes. But really, guys, with tight spreads now, very tight spreads, 1 point on the Dow, 1 point on the DAX, you know, 0.6 on the FX future, on the FX markets. You don't really need that unless you've got a very aggressive scalping strategy. I don't feel that that's too much of an issue. All right, so let's have a look at yes. So Spreads are tight, just touched on that. We're in the best time ever to spread bet. It's the best ever time. The spreads are so tight. In some cases, it's even cheaper to trade via a spread bet than it is to go with the exchange. DAX is a great example. You pay the exchange spread and you pay the commission. You're paying more than many spread betting firms. So it's a great time to be trading and spread betting. The spreads are tight. So I believe that it's good for day trading. Now, you've got to be careful. If you're trading something that's got a small intraday range and a wide spread, it's not going to be. You know, if the range is, let's say at the top of our heads, 50 points and the spread is 10 points, then that's not for day trading, guys. You know, you need something that's got a good range, a tight spread. Dow, great example, 300 or 400 point range at the moment, 1 point spread. DAX, similar. Even the FTSE, you know, FTSE going down to 100 point range, 1 point spread. Perfect things for day trading. Euro USD, GBP, JPY, all this kind of stuff. A margin is useful. We talked here about how it can be damaging, and yes, it can, but when used correctly, it's the perfect thing. If you're trading with, let's say you've got £10,000 and all you can do is that, then you've got to have big moves to get any money intraday. You've got to really have some big moves, where if you can use margin, use that £10,000 to kind of control 100,000 or more, then you can allocate capital a little bit more aggressively and you can make more money if the market goes in your favor. Of course, a double-edged sword, we talked about that. You've got to be careful, it doesn't kill you, but it can be a useful tool. Stops can be used, so you've got lots of tools that many brokers have, and by the way, if you've got a broker, one in a description below, there's a link on that, go and check it out. But loads of tools in terms of order types, limits, stops, trading stops, etc. So, and they're all geared up for instant access. You know, execution now is instant, stops are instant, fills are instant, everything is instant up to a certain size that covers most traders. So there's really a great time to be a day trader when you're spread betting as a day trader. Tax-free vehicle, biggest reason why most people trade via a spread bet. It's considered a bet, so at the moment it's free from capital gains. Thumbs up for that. A large selection of markets. Good thing about spread betting, guys, is you can trade anything. Commodities, gold, silver, platinum, copper, cocoa, cotton, currency pairs, indices, shares, whatever you decide to trade, it is there, it's available. So what that means is, from a day trading perspective, you can go where the volatility is. Let's say oil's being very volatile, and then you can start to trade that and use that as an opportunity to trade intraday. Let's say the Dow's volatile, you can go there. Let's say it's gone quiet, but some tech stocks are going crazy. You can move where the volatility is or isn't, depending on your strategy. So, summary, guys, can spread bets be used to day trade the market? Yes, they can. It's a great time to be a spread bet. It's a great time to trade the market, especially intraday, because of the tight spreads. Years ago, spreads were wider, volatility was lower, it's harder. Now it's great. Tight spreads, reasonable volatility, great tools. You've got mobile apps as well, desktop apps, they're quick, they're functional, margin is there, lots of reasons to trade it. As long as you're careful and aware that yes, there is risk, yes, you've got to be careful the leverage doesn't kill you. And if day trading is not for you, then you know it's not for you, but then maybe you wouldn't be on the video finding out spread bets are suitable for day trading if it's not for you. But like I say, best thing to do, open up a demo account, have a little play around and just see for yourself. And if the risk is too much, you don't fancy it, don't trade, that's fine, or go into a higher time frame. But if you like it and the instrument you trade looks good and you think you can capitalize on some opportunities, and take it slow, keep the risk managed, and see how you get on. All right, guys, make sure you are subscribed to the channel for more videos from me and others, and make sure you have a look at all the videos we've got in the library as well. Take care, bye-bye.